I've compiled a list of funds that have delivered 5% or more growth in each of the last 5 calendar years. Now, you'd think from all the thousands of active and passive funds that I can choose from that there would be quite a lot of entrants, but actually there's only about a dozen funds that have met this criteria. Let's look at these special funds. You might expect a lot of multi-asset funds in the list, but actually there's only one, which is Orbis Global Balanced. Now, this fund has exposure currently at around about 20% to bonds and 6% to gold. And it's this reduced exposure to bonds that I believe helped it to generate decent returns in years such as 2022. And overall, it does have a good track record of consistency. What's quite unusual about this fund is that it has one variant that only has a performance fee and no management fee, and the performance is only paid if it's outperforming the 60/40 index, and we've got the 60/40 index returns in this table here. There's also a fixed fee version of the fund where the fees are about 1.25%. Here are the current top 10 holdings for Orbis Global Balanced, a mixture of bonds, gold, value shares, and possibly a few growth shares such as Taiwan Semiconductor. Next up is MFS Meridian Contrarian Value Fund. Now, the challenge for value funds was delivering positive returns in 2020, but this Meridian fund was able to do that and hence beat the value index. So here we've got a performance graph ranked second in the value sector behind Ranmore Global Equity. We've got the annual return, so even above 5% in 2019 and 2025. We've got the country exposure, significantly underweight US, and we've got the sector exposures there as well. And then here we've got the top 10 holdings, which is reasonably diversified. When it came to ETFs, there was only really two funds that met the criteria. One was Japan if it was currency hedged. Now, I wouldn't use currency hedging to generate returns. I'd more use it to protect against volatility. So I'm not really a fan of hedged ETFs or hedged active funds either, except maybe perhaps in the bond space. So I'm not so keen on analyzing that one any further. And the next one was the US industrials sector, which has things like Boeing in it and Caterpillar in it and Honeywell. And it's quite a diversified sector, and it seems to have made the performance criteria. But again, it's quite niche, and I'm not convinced that going forwards that it will develop similar robust returns. European Dividends nearly made it as an ETF, delivering 5% or more growth in 5 consecutive years. But one active fund that did it is Waverton European Dividend Growth. It had some very solid performance, and it's been ranked in the top quartile for several years. Waverton European Dividend Growth, ranking 7 out of 102 over 5 years. But interestingly, the drawdown is ranked number 1, so it's more safe and steady returns, even if it doesn't quite shoot the lights out. And we've got the calendar year returns here, already doing quite well in 2025, did pretty well 2019, but not so good 2018. Sector exposures, they're fairly average. And then the top 10 holdings, which are more mid-cap companies. And I think that's what's driving the more sort of steady returns. And then we've got the fund managers who are AAA rated. Red Wheel Next Generation Emerging Markets has about $1 billion under management, 82 holdings investing in smaller emerging markets and frontier markets. The performance has been pretty good. As you can see in the red line, it has been maybe a bit choppy at times. The performance of Red Wheel Next Generation Emerging Markets has been 9% or better in each of the last 5 calendar years. And you can see from this chart that the returns aren't even that correlated with emerging markets. This is the country breakdown of Red Wheel Next Generation Emerging Markets. At the top, we've got Indonesia on around about 11%, then Philippines, United Arab Emirates, Mexico, South Africa, Vietnam. So we've got a mixture of emerging markets and frontier markets. This is the sector breakdown. Financials well ahead with over 30%, then materials, real estate and energy, and hardly any information technology. So this possibly helps to explain the robust returns over the last 5 years for this fund. Here are the top 10 holdings of the fund, quite a lot of banks and mining companies, and the two fund managers are both Citywire AAA rated. BT Argonaut Absolute Return Fund holds both long and short positions, and on a calendar year basis, its performance has been phenomenal, delivering double-digit returns in each of the last 5 years. However, that's not been without some volatility, and actually it hasn't outperformed a global tracker over the last 5 years. The fund takes both long and short positions in a quite concentrated portfolio that's meant to be uncorrelated with global equities. Fund isn't volatility managed particularly, and you can have periods such as 2021 where the fund has quite significantly different performance to that of a global tracker, which could cause you to lose faith in holding the fund. So for that reason, I'm not so keen on this one. Premier Miton Tellworth UK Select is a long-short equity fund. Its returns aren't that spectacular when looked at compared to its sector alternatives, or in absolute terms, only around about 50% over 5 years. However, the consistency of those returns is fabulous. And if you want something that doesn't seem to have much in terms of a drawdown, it doesn't really seem to have a bad year, certainly in recent years, then this is something worth considering. So when it comes to drawdowns, it's ranked number 1. We've got the annual performance here. It did have a bad year in 2019, although I think some of these funds have learned quite a lot from their past and they're getting better now at delivering the consistent performance. Here's a breakdown of the top 10 portfolio holdings and the sector exposure with the long and the short positions shown. Here's M&G Japan Smaller Companies Fund. This offers potential for uncorrelated returns because smaller Japanese companies possibly trade more with their domestic markets, so they're a bit more insulated from what's going on in the global economy. Although I think I'd prefer something that wasn't quite so boxed in with quite a narrow remit that wouldn't necessarily guarantee outperformance year after year. Rockwood Strategic has delivered impressive total returns in the UK small cap space. It runs a concentrated portfolio and the management team often take a directorship role on the boards of the companies they invest in. I'm a bit concerned around the liquidity of this investment trust in terms of the gap between the buy and the sell price, and maybe the ability to either buy or sell in large quantities depending on market conditions. Here are the current top 10 holdings. I'm particularly impressed with Filtronic and the deals it's been able to do with SpaceX. The Nifty 50 India Index nearly delivered 5% or more growth in 5 consecutive years. One active fund that was able to make this achievement was India Capital Growth, which is an investment trust. The fund has a small and mid-cap bias, and it's possibly more interesting to buy it when it's on a pullback from a high rather than chasing it when it's a top performer. Credo Global Equity Fund is not one I'm familiar with. Fund size is only 142 million and the performance rank is 107 out of 440. However, it has been able to deliver consistent returns and it did meet our performance criteria. We've got the annual figures here showing the 5% or greater for 5 years. We've got the country exposure, which is fairly standard, still quite a large US weighting, although quite overweight UK. Sector weightings there and top 10 holdings, which are a bit of a mix of mega caps like Microsoft and Visa, and then maybe some smaller companies like this MTU, Aero Engines and HCA Healthcare. It's not particularly a fund that I would research further. So here's the full list of funds. We've got the indexes at the top, the exchange traded funds. Then we've got the open-ended investment companies next. And then at the bottom, we've got the investment trusts. I'm Ian Shadrack, an accountant with over 30 years experience. I help people put together portfolios for their retirement so they can have confidence in their finances for the future. If that interests you, then check out my website. I'll put a link in the description.